Hi, I'm Frances Taylor, Head of National Accounts at Kensington Mortgages. Thank you for joining us today. I'm going to be giving a bit of market insight into the self-employed market today. We've pulled out some really interesting stats, which not only I think you'll find interesting, but somewhat surprising. And what this session will really do is set us up for our panel debate, which is also available to view on our YouTube channel. So feel free to go straight over there after this and listen to some of that insight. Okay, so first up, we're going to have a look at the change in the market. So comparing 2001 to 2020, 3.3 million of the UK labour force were actually self-employed, so that equates to around 12%. Lenders were typically requesting 3 years worth of history evidence, and if you fast forward to 2020, we see quite a bit of change in this. So now 5 million of the UK labour force are self-employed, so that equates to 16%. And lenders are relaxing a little bit, asking for 2 years worth of self-employed history. That's the majority of the lenders, but specialist lenders are really leading the way, asking typically for 1 year's worth of self-employed criteria. Depending on the loan to value, that is something we do at Kensington. Eloise is also doing a criteria session on self-employed, which you can view on the YouTube channel, so feel free to head over there or have a look on our website for our criteria. But even with self-employment rising and lenders becoming more understanding, we do know that self-employed customers are still struggling. From a recent survey, we know that 36% of self-employed individuals don't actually bother submitting a mortgage application or a remortgage application in fear of it being rejected, which isn't great at all. 21% of self-employed individuals actually are rejected when they do make an application, with over a fifth of them being turned down 4 or more times, which is not a great customer experience at all. 65% of self-employed people have actually considered changing to employed rather than being self-employed, just to improve their chances of getting an application through, which again, it's not a great experience. We know that that's not particularly right in all circumstances, but it does give a good insight into how these customers are actually feeling. So next up, we're going to have a look at the self-employed customer in 2021. So firstly, the types of professions are changing, they're evolving, lots of new industries popping up. At Kensington, our top self-employed applications actually come from athletes and dog walkers, which you may be surprised to hear. And who knew in this day you'd be able to make an income from being a YouTuber or a blogger, an influencer, or even a TikToker? Not that I'm particularly sure what that actually means. In terms of the customer demographics, so looking particularly at age and at gender, we're seeing more and more 16 to 24-year-olds than ever before being self-employed. Now, they might not necessarily be the age to be making a mortgage application at the moment, but definitely gives some insight to what the future may hold and what your customers may be looking like. The majority of our customers in the self-employed market are 45 to 54 years old. If you then look at gender, majority of self-employed applicants are men, so 64% compared to 36% of women. And when you actually look at what that is as a total of the UK, that's 19% of men in the UK are self-employed and 11% of women in the UK are self-employed. When you ask those people why they're self-employed, we've been told that 63% of them have greater control in hours, 56% enjoy having the choice of where to work, and 55% of them have a better work-life balance. Now, I'll probably caveat at this point that we're in lockdown. You may be sitting at home working in a different room, in the box room. You might be lucky enough to have an office, but with a husband, a spouse, and children and pets around. So I'll just caveat that these were statistics made before lockdown. So last up, we're going to have a look at COVID-19 and the impact on the self-employed. And what we really wanted to draw out here was the employed person versus the self-employed person from a risk perspective, looking through a lender's lens. So these stats came from our centimetre report that we've done. And what it showed us was with an employed person, they will typically have 31 days worth of financial reserves versus 6 months of financial reserves for a self-employed person. So I was quite surprised at that statistic. 24% of small businesses, which are generally 10 people or less, could actually sustain themselves for 9 months or more. So it's quite a big difference there. And from a risk perspective as a lender, that's very attractive on the self-employed side. What we've then done is taken 3 typical customers, and we wanted to really highlight the impact that COVID could or couldn't have had on these individuals, but also on the industry that they're in. So I think 2 of the buzzwords which we absolutely love in the mortgage market are adaptability and diversifying. So we've got an example here of Steve, who's a local bar owner, has seen a drastic reduction in earnings, but that's not necessarily the case for everyone. Lots of people have diversified, offering takeout services, online services. You see cocktail making online and get your kit kind of through the post. So lots of diversifying that those particular people have done. We've then got an example of someone who hasn't really seen a dramatic impact, so stayed pretty much the same. But we wanted to really highlight that a lot of people have actually seen a dramatic increase in their earnings and have really profited from from relatable. Oh, damn it. Maybe you can cut this bit out. So then we really wanted to highlight Amir. So Amir runs a PPE import business and has actually seen a really dramatic increase in their earnings. So we really wanted to point out that the pandemic hasn't necessarily meant reduction or staying the same. Some people have absolutely seen an increase. And that's it from me for some market insight. Like I said, please go on our YouTube channel and have a look at the panel debate, because this is set up very nicely for this. But thank you very much for joining us.